Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews where we buy a couple of cups of coffee and chat to a minister or a CEO or some newsmaker about stuff that we care about, interest rates, the economy, investing. And today we have David Mayhew, welcome to interest.co.nz.
Thank you, Bernard.
Who is the Commissioner for Financial Advisors. Started off earlier this year and came to New Zealand back from the UK to find a system for financial advisors, which was what, in your opinion?
Fairly non-existent, actually. I mean, the new legislation which we're implementing at the moment is new, and the financial advisors have not been regulated up until now, which is surprising, given that 20 years ago it was happening elsewhere, and long overdue.
And what is being set up to replace the nothing?
Well, it's very focused, it's very targeted on particularly investment advice, so investment advice to retail customers. That's the key focus. So people who deliver that advice will have to be authorised by the Securities Commission. So that means essentially taking an industry and turning it into a profession. So you've got to get through the gates by making sure you've got the right level of competency. You're then subject to a code of conduct, and if you breach that code, you're subject to discipline. And ultimately, you can be thrown out if you're considered not fit to be an advisor.
So, what sort of tests do people have to pass to become a financial advisor?
Well, it's based on the National Qualification Framework, and it's set at level 5, which some people say may be too low, but we'll see that over time. And there are a range of different qualifications which get you in through the door, which have all been specified in with the code. And then separately, just not to lose sight of it, there's a whole raft of other advisors who now have to be registered but not authorised. So the distinction for your viewer really is to think about, depending on what nature of advice I want, do I want investment advice, in which case the person will have to be authorised. So you can ask the question, are you an AFA, authorised financial advisor? That's the first stop, because you don't want to be advised by someone who's not. If it's insurance and mortgage-based products, then you don't have to be authorised. It just depends on what you're looking at. And that will be over time. We hope first AFAs will be available by the end of the year, but certainly by 1 July next year it'll be compulsory.
So does this mean if I go into a bank and say I'm interested in putting some money into something that's a little bit different, then they have to wheel someone out from behind the office who's authorised rather than just registered?
Yeah, well, your example doesn't quite work because, as is the way with these things, if you're looking at a bigger financial entity like a bank, then they've got this carve-out where they don't have to have authorised people working for them. They take the frontline responsibility for the quality of the advice they give. They will have to have people who are equivalent, effectively, of an authorised financial advisor, but they don't need to be authorised by the Securities Commission. And the way that works is they become what's called a QFE, or a qualified financial entity. They have to look after, as I say, their advisors and their behaviours, and they have to have systems and controls. And the Commission gives them the status of a QFE.
Who else has been carved out?
People who involve in wholesale advice, so not retail, focus very much on what they call the sophisticated end of town. Although, as I always say, I've met many people who are sophisticated at the start of a relationship and are very much retail when it all goes pear-shaped.
So if I turn up, say, the end of the year and my financial advisor is an authorised financial advisor,
Yep.
What should I expect them to do for me?
Well, part of the obligations that they're under now that they're being professionalised is that they have to disclose to you so for example, the way they earn their living. Are they on a commission-based or are they on a fee-for-advice base? They've got to disclose any relationships which cause a conflict of interest between the advice that they're giving and their own position. And the idea is to make this information available to retail customers in the investing space so that they can make a decision. Do I want to follow this? Do I want to use this advisor at all, let alone do I want to follow his advice? And then, subject to the code itself, if you feel that they are not putting your interests first, then that could potentially be a breach of the code. Separately, they're also got to be all part of a dispute resolution scheme, so that if there is a problem about the quality of the advice, which isn't necessarily a disciplinary matter, but you can dispute it, there's a dispute resolution scheme other than the courts, so it's hopefully cheap and quick process of justice.
Why are financial advisors still allowed to take commissions? Because the big problem through the financial finance company debacle is that many financial advisors simply put you into the finance company who gave the biggest commission.
Well, that's right. There is a problem around there because it creates a conflict of interest, and that's the thing we're trying to manage. I think the view is that you still need to have a commission-based system at least partly available, because if you don't, people won't pay for advice and therefore won't get advice. Because what commissions do effectively is they allow the advice to be given, and then the product provider pays the commission to the advisor. Now, obviously, in the end of the day, the client pays through their premium, but the general view is that you may still need to have that mix between fee-for-service on the one hand and commission-based. But it's something we have to watch, I think, over time to see whether that continues to distort advice and distort behaviours, because it is a driver in the wrong direction.
And some financial advisors seem to be dropping the idea of having commissions anyway and are going towards fee-for-service.
Yeah.
Is that fair?
That's right. And in Australia, they're particularly looking at abolishing or banning commission in investment products to try and avoid that problem. But as I say, it really depends on whether people are prepared to pay for advice. So and then again, that goes back to how much money you've got to invest, how much you want to spend on actually finding out where you want to invest it.
Now, if you were an investor going to a financial advisor, what sort of questions would you ask to make sure they were being upfront and that you were getting good advice?
Well, as I said, the starting point is to ask, are they authorised? And then you'd be asking, what's you'd expect them to be told what their basis of the relationship is going to be around the money. Don't be shy about asking about how people earn their money. And then once you get into the question of where you're being advised to put your money, you want to know who's going to manage it, what the safeguards are around the holding of the money. So, for example, is it a fund manager? Is there a trustee involved that actually holds the money as opposed to the fund manager? You might be wanting to know where the fees are taken out, because the problem with fund management is where the fees are layered through the different stages of the game. And just make sure that you've got a very clear picture of what your return's going to be and what the risk is, because at the end of the day, the question with the finance companies was not really understanding the measure of risk, particularly around liquidity and that sort of issue, and the nature of the products they were investing in.
Now, since we've had the commission for financial advisors set up, we've seen a slight change in the underlying landscape for regulation, with the plan to create the Financial Markets Authority. And Simon Botherway, who we've had in earlier, and I'll link to underneath this video, he is setting up that Financial Markets Authority. What does that mean for the Commissioner for Financial Advisors?
Well, the new authority will be responsible for the regulation of financial advisors. So effectively, they take over the role that the Securities Commission has at the moment. The Commissioner will be, that's me, will be a member of the board of the new authority automatically, sort of as I am a member of the Securities Commission at the moment. But the decision has been taken, and this is reflected in the draft legislation, to disestablish my position over time. So once the new regime is in play and is up and running, so I'd say by the end of next year, December 2011, that's when probably my position will be abolished. Functions that I perform will then be rolled into the Financial Markets Authority. One of the members of that will take responsibility for the particular functions that I perform.
Can you tell us a bit more about the Financial Markets Authority? What type of investments it will regulate? How it's different from the previous system?
Well, it's much the same products in the sense that you're talking about investments, securities, and the like. The two things are going on. One is you're consolidating a number of different functions that are held in different agencies into the one. So you're bringing some people together. And then alongside that, more power and more functions are being given to it. So, for example, the trustees and the statutory supervisors who have been felt to have been underperforming in relation, for example, to the finance company issues, they're being regulated by this new authority. They'll have to be licensed by them, and they will be subject to potentially having those licenses taken away from them. So there's more power given in that regard. Auditors, another area where the Financial Markets Authority is going to have a role to play in the licensing of auditors. So it's got more power, more functions, and hopefully more resource. I mean, that's the big issue, because if you under-resource it, that's going to create a problem. The real issue is going to be expectation gap. There's always an expectation gap about what regulators can do and what they in fact do, and that's the problem we risk both with the current system and the new one.
And what are the timeframes for getting people authorised, and when should investors expect a ticket on the wall or something to say, hey, this is an authorised financial advisor?
Well, we're hoping that by 1 December, because we're in the process of rolling this out, by 1 December there'll be people who can call themselves authorised financial advisors. By 1 July next year they have to be, otherwise they cannot give the advice. And so we're in this process of rolling out this implementation. Similarly with the banks, they will have to be qualified as financial entities by 1 July next year, otherwise again they wouldn't be able to use that business model. So it's a watch this space over time, I think is the answer, but certainly by 1 July next year everything has to be in play.
And what are all the financial advisor networks and banks actually doing? Are they putting their advisors through courses or army training courses? I mean, what are we talking about?
There's a lot of that going on, and that's been one of the real successes, I think, of this new legislation, because even though it's not yet in play, industry spent a lot of money in upskilling and training people, both in the big houses, but also in the smaller networks. That people are really getting into grips with it in order to be able to pass through the competency stages. I mean, a lot of people will be able to go through existing qualifications, but there are a lot of people who will have to sit exams to get themselves into play. All the authorised financial advisors will have to sit at least one exam relating to the new regime, which is available from, I think, this month. So yeah, there's a lot going on, and that's great, because everybody's buying into the idea that they have to be a profession now, rather than just unregulated territory.
Great. David Mayhew, the Commissioner for Financial Advisors. That's another in our series of double shot interviews. I'm Bernard Hickey for interest.co.nz.